Valuations keep going up, the market goes up, you don't really understand it, you don't want to get involved, so you stay out of it, you start to look for smaller opportunities and you miss the big thing. And it's only until I started to understand what was driving it, that it was driven by this massive technological revolution going on, but also the Fed balance sheets and the global central bank balance sheets. Once I understood it, it became much easier to just buy it.
The specter of inflation looms over the crypto markets, sending shockwaves through the Bitcoin landscape. Despite the best efforts of bullish enthusiasts, fresh losses have taken their toll as the BTC price abandons its prior strength. There's more to this narrative. Opportunistic whales are maneuvering with liquidity, adding another layer of complexity to the arena. The rapid twists and turns of this ever-evolving market showcase the resilience and adaptability required to navigate the world of cryptocurrencies. Hello, and welcome to Crypto Street. Now it's time to delve into the captivating perspective of Raoul, a visionary who has dedicated himself to understanding the future of Bitcoin. We'll uncover his invaluable insights and complement them with a comprehensive analysis. So let's get started.
Liquidity is everything. All of my forward-looking indicators have been suggesting that liquidity is going to keep rising and that it would drive crypto and tech more than anything else. And that's basically been the story of the year so far. And I think that continues. And that's confused a lot of people. The one trade that's confused me is the bond trade, and that's confused a lot of people. Bond yields should have fallen by now, and they still haven't. But I think this is to do with the debt ceiling issue, which is the other confusing thing. Because the debt ceiling issue has some real risks around it, and we don't really know how to price them. All we do know is people are pretty bearish around it. And I think that's reasonable too, to have hedged around it, because we don't know what can happen. But the chances are that anything that causes a paralysis of financial markets will lead to that expression I always use, more cowbell, more stimulus to come.
Bitcoin's exhilarating journey continues as it once again dipped below the $27,000 mark on May 19th. Expert analysis has identified significant volume trades exerting pressure on the price, creating an intriguing landscape for crypto enthusiasts. However, a glimmer of hope emerged as a modest recovery propelled the pair to a familiar trading range, capturing our undivided attention before the final opening bell on Wall Street this week. The overnight downside movement can be attributed to mounting market expectations of an interest rate hike by the United States Federal Reserve in June. These expectations gained momentum fueled by encouraging data on low jobless claims for the week, complemented by a hawkish tone from Fed officials. The stage is set for a thrilling showdown between the forces of inflation and the ongoing pursuit of reducing it. At the 2023 International Insurance Forum in Washington, D.C., board member Philip Jefferson articulated the prevailing sentiment, stating, "On the one hand, inflation is too high, and we have not yet made sufficient progress on reducing it." These words reverberate throughout the crypto sphere, adding an extra layer of excitement and anticipation to the unfolding narrative. The crypto market is a theater of exhilarating possibilities, and we are privileged to witness history in the making.
Technology, crypto rallied the most. If I just look down my Bloomberg right now, the S&P's up 8%, the Nasdaq's up 25%. I've been saying this since last year. Everyone thought I was crazy. The exponential age basket that I talked about in Real Vision, that everyone thought I was a complete idiot for, that's up about 40% this year. Crypto, which everybody thought was completely dead, is up 50, 60, 70%, depending on what you're looking at. Stuff like Solana's up 120%. Valuations keep going up, the market goes up, you don't really understand it, you don't want to get involved, so you stay out of it, you start to look for smaller opportunities and you miss the big thing. And it's only until I started to understand what was driving it, that it was driven by this massive technological revolution going on, but also the Fed balance sheets and the global central bank balance sheets. Once I understood it, it became much easier to just buy it. And I also did a lot of work in the Everything Code to figure out that P ratios and being driven actually by the balance sheet and global M2. It's all monetary phenomena, and it's not about earnings anymore. Everything is driven by one thing.
In response to this compelling development, Adam Back, the visionary CEO and co-founder of Bitcoin firm Blockstream, presents a compelling case for hyper-Bitcoinization on the horizon. He envisions a future where the growth of BTC price transforms it from a luxury asset to an unattainable treasure. In a recent tweet, he shares his perspective, emphasizing that the increasing demand from 10 million people seeking to buy just one Bitcoin over the span of a few years would inevitably propel the price out of reach. What's even more remarkable is that the current holders, the steadfast holders of Bitcoin, are not eager to sell. Adam Back highlights this unique characteristic, revealing that the recent influx of whole coiners has only fueled their desire to acquire even more Bitcoin, steadily moving towards their next target. While the whole coiners and their unwavering commitment drive the Bitcoin revolution forward, Glassnode data uncovers an intriguing contrast at the other end of the spectrum. Whale wallets, entities holding between 1,000 and 9,999 BTC, have shown signs of stagnation, marking a shift in their trajectory after a decline since mid-2022. However, the entities with over 10,000 BTC remain within a range that emerged following the FTX collapse in November of last year.
Khan is talking about how he lost 9 billion hedging since 2012. Or since later than that, because he's been expecting the crash. But I keep saying this 50% correction in equities can't happen because simply they just expand the balance sheet and the denominator takes care of the fall and they rise. So it just simply can't happen. The only way that it could happen is if we see massive quantitative tightening. But then the economy goes down the toilet and they've got the unemployment side of the equation, the inflation side. So it just can't happen right now. Now, that's not mean this will stay forever, but it's a situation that quantitative easing is used as a way to pay the debts, and particularly the interest payments on the government debt. And that was, again, part of this everything code, that everybody reset their interest rates to 0 in 2009. Everybody, every country. It was like a global reset. I only realized it recently that that was the global reset. And so everybody's now in this debt cycle of every 3 to 5 years of having to roll the debt. The interest payments get monetized, and that is the increase in the balance sheets. It almost exactly works out for the US, the UK, Japan, Europe, etc. They're all just the monetization of the interest payments.
We want to hear from you too. Share your thoughts in the comments section below. Are you excited about the potential interest rate hike and its impact on Bitcoin? Let us know. And remember to hit that like button and subscribe to our channel for more captivating content like this.